Sure, man. Can you hear me that side? Yeah, I just can see my mic is showing that the sound is going in. So can you set up your Zoom meeting?
Can you hear me?
Yeah, I can hear you.
Okay, I can hear you now.
Okay, yeah. Let me get started. So yeah, this is the market. We're starting by analyzing. We can do the risk management. So let me switch off my WhatsApp here. So what you start by analyzing means you are going to look for an entry. It's about an entry. When you're analyzing, always just know that you are looking for an entry. So what you're gonna see, I'm going to tell everything here. What you're gonna see when you open your chart, maybe I don't know which platform you'll be using, but mostly it will go to 24 hours time frame when it's a trading view. Even if this blue highlight is on the 15 minutes time frame, just know what the market is on the 24 minutes time frame, mostly when I open it. So now you're going to just check full market, even if you can zoom in or out this market and be like this. You understand? You just check where the market is going in this bigger
Right.
picture. Understand? So, for me, I will just do it like this because of I can't be checking even this position because of I'm not going to trade this. I'm going to trade somewhere here. You understand? And then
Right.
when it's like this, I can even zoom it again like this. So when it's like this, so as long as I can see this one, even if I can use this one, I use this one because of others, they will say, why you use this one? Why can't you use this one? You understand? Even if I'm going to use this one, but this one I see what is equal to this one. You understand? It doesn't give me the where the market is going. So at least if I use this one, it will be followed by these three touches, and then again another two touches is here. You understand? So this thing they are telling me that the market is falling. You understand? The market is falling. It's where the market is going. When I put my trend line like this, some of the people they use the trend line. You understand? When I put the trend line like this, it shows me what the market is going down than going up. The market is
Right.
going down than going up. Means the market is going down. So
You know, you,
some
you know, I don't mean to stop you, but you know what's funny? Like before, like I was watching all of your videos,
yeah,
and the shitty part about me not paying attention now is that I actually like everything that you were talking about just by zooming out a while ago, just
yeah.
bring clarity to this market because I was not seeing the double top the whole entire time I'm looking at this market. I was not seeing the double top because I watched it in your video when you said, okay, you know what? If we should have this top here and this top down at the bottom, then more than likely the market would show us the direction that it's going in. But I was not zooming out to see the full picture. as it relates to the direction of the market. I know that you just did that, like I'm just looking at you doing it. Uh, and it brings so much clarity, man. But
Yeah.
continue.
Yeah, so when you see the market like this, let's say you see that the market is falling like this, and then what you have to know is you have to know that the market sometimes will be going up. You understand? Doesn't mean when you say the market is going down means you're just gonna look at the downtrends only. Somewhere, somehow, the market will go up a little bit. Look at here, the market is going up. The market from this point to this point is going up, and it can go up until here. From here again, it will go down. And if you check, when it starts to go down, it will go down more than before. Even if this market can't hit here and then start to go down from here, still the same, you understand? So if the market is about to do what? To go down where it is currently, then this space is for risk management. You understand? When we say risk management, we are talking about this space we were not expecting, or the market can not go. Now we are saying the market is going down, but unfortunately, there is a slot where we say the market might go up while we say it is going down. You understand? So you have to risk this space. You understand? So now let me do it for you like this. So when we say here's a risk management space, you'll find that this space maybe is going to cost you maybe something like $20, for example, 20 USD, understand? So this space is going to cost you 20 USD, understand? So means if you want to put your stop loss here on the red horizontal line, you are going to use maybe an account that is more than 20 USD. Maybe let's say you're going to use 100 USD. When you use 100 USD, then this space, when you put the stop loss on here, and then means you are risking $20 in order to make how much? Let's say when it is going down on your TP and then is plus. Let me like this. This is going to be plus maybe $200, you understand? It will be plus $200. This is the money that you're gonna make if it goes your way. So means when it's like this, you are risking $20 in order to make $200. Let me switch off the hood and then this on top here. And then you'll find that your TP is where? Is here. And then from here to here is plus $200. But from here to here is minus $20. Now, your entry, if you enter for a sell here, and then means you are going to make $200 if it hit your stop loss. And then if it doesn't hit your stop loss, it goes to the I mean, if it doesn't go to your take profit and then it goes to your stop loss, means you're going to just lose $20. That's how the risk management work. And I want to show you how to do risk management according to the chart. Now I'm just talking about how the risk management work. From here to here, you have to just lose $20 in order to make $200. You understand? So you don't have do what? Blow the whole account. If most of the people, you know what they're doing, they take $20 and then they take a signal. Maybe I said, okay, this is our stop loss, and me draw the line. Here is our stop loss. I said to them, here is our stop loss, and then here is our entry level. Here is our entry level. Someone come here with $20 or less than $20 and enter for this market, you understand? And then he forget or she forget, or this market from here to here, it doesn't calculate. From here to here is $20. You'll find that a person has $15. That's why they blow their account, because of if the market goes against us, means that person on the halfway, the account will be blown, because this is a $20 risk, you understand? That's why.
Right. But let me ask you this though. Because this I want to have a lot of clarity with as well. So the fact that you said, all right, you know what, for the stop loss, what would be risking is $20. We're breaking it down in this fashion to say that, you know, what would be risking in this case would be $20 to gain $200. But what if you should decide to, because now this is gonna be a very important and vital part for me as well. What if you decide that, you know, volatility is 75. Let's say you have like $300 on your account, and you say, you know what, I want to work with the best, try to get as much pips possible in the shortest mode, or get as much profit in the shortest amount of pips possible. And you say, you know what, I'm going to put my lot size at, I have $300. I'm gonna put my lot size at 0.100, and you send out the signal to say, all right, you know what, this is where the stop loss should be, and this is where your entry would be. How that would have worked out, do you think, in this case? Because I think lot size is going to play a very vital role in this. But let's say somebody has $300, you send out the the stop loss and entry point for expecting persons to follow through for $20, but the lot size is much larger.
Or
How
according to the lot sizes, I'm going to show you here. Now let's talk about the big money, and then I'm going to show you which lot size you're gonna use. And we do have this calculator. I don't know if you know about it. This calculator is the one that is going to tell us which lot size we're gonna use and where you put your stop loss. Understand?
Okay.
This one is going to show us everything. Let's say, okay, sharp. And now you are using $300. You are not like me who's using $100. And you see all from here to here with 0.00 is $20. You understand? So on your side,
Right.
go into this calculator. This calculator, it will calculate everything for you. Let me go down here. Here, you just write an entry level, stop loss, and TP, and then the lot size. So when you are in here, you see, well, okay, 0.001 is a loss of maybe $20, but you have $300. Maybe you want to risk $150, means it's a half of an account, you understand? So you are going to just come here where you return your everything. You just choose another lot size, maybe it's 0.1. You're going to write 0.1. On here, it will tell you the risk. You'll find that it's changing from $20. The risk, it might be maybe $50. Means you are going to do what? You are going to place 3 trades, you understand? When you place 3 trades, 1 trade is going to be what we call a loss of maybe $50, you understand? The risk of $50 per trade. So means those 3 trades is going to be $150 because of you have $300, you understand? So you are going to see everything in this calculator. Now I can't do it because of we are on the bigger time frame. I'll start to show you when we go to smaller time frame because of it will write a big numbers. Even if I can take this, what do we call the entry coordinates of mine and the stop loss, you'll find that is giving me something like thousands of dollars here because of it's a bigger time frame. But in the smaller time frame, you will see. So in here, you will be on the bigger time frame and looking for the what? For the entry level, you understand? So now you said, okay, if this market, it is going down like this, so I have to do what? I have to take a sell. So this sell, you're not going to take on this same time frame. No, you are going to check what is happening on the last sometimes most of the times, the time I was taking a buy, the market was on here, gave me 3 candles. I was seeing, okay, now these 3 candles, they are going to do what? Give me more green candles. That's why I went for a buy last time. I think it was last week. So I went for a buy and I was in a profit. So in here, again, you see, okay, this thing that is happening here, it seems like a consolidation. So this candles seems to be taking same size when we are counting even the spikes. So now what I see now is a what? Let me say, according to the candles, I see 2 red candles here. I see 2 red little candles. So what I predict is that this candle will be bigger. It might be bigger and then be equal to this one. You understand? This is my prediction of the market currently. I'm saying, okay, this candle might be bigger and then be take this size. So now if I say, okay, I predict or this market is going to fall and make this candle, means what I have to do, I'm going to search for a sell and I have to see where is my entry level. So I'm going to go up, I'm going to switch time frame. So when I'm switching a time frame, doesn't matter which time frame I'm switching to. It's about viewing the market, how the market is moving. It's not about you have to go to the 4 hours or 1 hour, 15 minutes. Whenever you see the clear picture to make an entry, that's where you have to do what? To take an entry. But make sure that those time frames are the smaller time frames. Don't use the bigger time frames. But even though you use the bigger time frames, the calculator, when you start calculating, it will tell you the money that you want to risk here is not possible to risk with that account that you have. Agree, you take $100 or $300. When you come here, when you start to calculate your things, you will see that, hey, this thing is giving me a lot of maybe loss. Let me say a risk, it becomes maybe thousands of dollars. So you go to any time frame, but a smaller time frame, agree, we are going down. So maybe mostly I like to press 30 minutes or maybe I can press 15 minutes. That's where I can see, well, okay, how the market is going. It was falling and then now starting to do this. You understand? It was that thing that I saw in the bigger time frame. It was going like the candles are about to do what? To put like they are trying to take the same size. So in here, I see it with a bigger picture. You understand? That thing that was too small in here is a bigger picture. So I know what I have to do, what I can do. So I can even do my risk management in here because of the structure that you see on the bigger time frame it is still there in all time frames. What is happening in 24 hours, even in 4 hours, is happening even in 1 hour, in 30 minutes, 15 minutes, 5 minutes, and 1 minute. It's still happening the same. If I see this structure like this saying, okay, this is my I don't know what they call. They say high or whatever. This one is a high is high than this one. You see, this thing I still saw it in the bigger time frame. As you can see, I can still use the line that I showed you the time we were starting. You see, the horizontal. And when I say others, they put something like this. You see, even here, I can do what? I can use the same line the way I used it before. So whatever is happening in the 30 minutes time frame or 1 minute time frame is happening in all time frames. So now I'm going to find my support and resistance. I'm looking for the entry even now. You understand? It will depend how much do I have. I'm going to do my risk management in 30 minutes. And if 30 minutes is giving me bigger numbers, means I have to switch to 5 minutes or 15 minutes so that I can see what the risk management I'm doing is fitting with my account or is matching my account now. So now I'm going to go for support and resistance, you understand? So where
okay, so depending on the time frame on your account, that's what would determine the best you're depending on your account would be determine the lot size will be let me say this the right way. So determine on your account, basically the amount that you have in your account would determine the best time frame for you to look for entries.
Yeah.
Yeah. Okay.
So now I'm going for a what? For a support and resistance. So where it is supported and resistance, is where the market was moving like this. When it is moving like this, you see there is somewhere where the market do what? Hit multi times. It hits multi times. It's on top here. And then even on the bottom, it's hitting multi times. It doesn't go anywhere. Before the breakout, there is a breakout. So for us to see whether the market will be going up or down with the breakout is because of the bigger time frame. The bigger time frame always, when you see this on the smaller time frame, just know the bigger time frame will do what? Will crash the way you said. Like I said, the candle is going to be red and it's going to be longer and take that other candle size. So means whatever is going to happen, like the up and down, it was going to break with a down trend because of this market, this smaller market, want to do what? Want to respect what is happening in the bigger time frame. So at the end of the day, so that we can have a sell, you understand? So now what I see in here, practically on the chart, I see already the market has been hitting multi times. Here is the first one. Even if they are not equal, they will be like they are equal. They won't be equal. You understand? The point where the market is keeping on doing what? On hitting. It's hitting and going up on this side. On top here is hitting and go down. You understand? So I'm going to draw my two rectangles here. Let me start them from here. Let me do it here. Yeah. So when you see something like this, you see this one is out of the box. Let me draw another box. I want to show you which one is out of the box.
But I know we're talking about resistance and support, but just for me to understand, because on a normal base, for me, let me tell you what I'd normally do. And this is us like rewriting a different format in my head now, right? So probably one of the things that would kill me now is where you have that the green candle, the last green candle at the top, where
Yeah.
you have that. I would draw my box from right there to
Yeah.
come down, See if you can help me here visually. So use another color. Yeah.
Mm-hmm.
So the green candle at the top, I would draw my box from there, take it down and bring it all the way across. But that would be wrong. Would that be wrong?
No, it's not wrong.
Okay. But this that you're showing me now, why would you take your box from right there? What's the reason why you put your box right there, the red one, the red box?
So for here, let me show you. I was saying this one, you can see it's out of the box, this one. It's
Right.
fake breakout. When we say fake breakout, means the market was like it's going up. We were going to buy and say, it's breaking out. So that became a fake. And then it came again to the same consolidation. And then now it's starting to do what? Starting to act the way it was acting before. You understand?
Oh,
That's how that's why we call it a fake breakout.
so basically that's why they call it a head and shoulder as well, because what it's
Exactly.
doing now,
Yeah, I wanted to
when
say
when it
others they call it a head and shoulder.
right. So now I understand why it's called a head and shoulder, because when you have the left shoulder that's created, the left shoulder would be the market respecting the trend. But then when you
Exactly.
have the head now, it breaks out of the trend to create a
Yeah.
false move, and then the next shoulder would be it what would it correcting itself to continue.
Exactly.
Oh, what a lot of clarity.
So now we are going to make our entries, and this is where our risk management is starting to make sense than in the bigger time frame. When we say risk management, and remember, I've been drawing from the time frames back there at the 4 hours. I said the market is doing what? Is falling. Remember, the market is falling. And let me draw like this.
When you say
Market,
folding, what you mean by folding though?
it is a downtrend.
Okay.
It is a downtrend. It's a downtrend. And then when it's a downtrend like this, as you can see, this line will go until like down there. You understand? This market, it will break out. When it break out, it will break out with a sell because of the market is still going down. You understand? So now we want to make our what? Our entries. For people who are scalping, you know, they will use this structure. You see this structure that you see now. They are going to use this structure that you see now. They will be buying from here, they buy, they take profit here. And then from here, they sell, take profit here. From now, they are buying. And then they will take a profit here. But us who are doing what? Who are swing traders, who are growing small accounts and we want to hold for some weeks or some months, or even 3 days to 5 days, you understand? We're going to use this line, this one on top here, this one, because of it's telling us that the market will go down for a longest time, because if we check it on the 24 hours, you understand? So we say the market is going to go down. So where we're going to take a trade is around here. You see here, we are going to take a trade of us for a sell. It's where I took a trade, I think so. This is where I took a trade because of I was analyzing with someone in the morning. So we took a trade from here. Where is going to be our stop loss? Our stop loss will be where the market started to go down. As you can see here, the market started to go down from here. You see, on this fake breakout, even if you don't put your stop loss in here, you can put your stop loss here because of this is started to go down before it can start to consolidate here. You understand? So for me, if I'm using maybe $300, I can't take the stop loss and put it here. I will put it here because of here is control. You understand? So I know the market will be doing what will be going up and down, busy going down. You understand? The sellers will be more than the buyers. The buyers will come, but they won't be more than the sellers. So you will find that the graph is going down. It's doing a downtrend. You understand?
Okay.
So now when I say the stop loss is going to be, I'm going to put it here because of most of the people, they use small accounts. That's why I'm doing my stop loss here. So I'm going to say, let me copy all the things here. For the TP, I will tell you, because of we are going to do what? We are going to hold for a longest time. So for the TP, I will show you why I'm not putting the TP right now. I'm going to my calculator, I'm going to calculate everything. Then I said the entry level is going to be 57, 64, 29, and then comma 80, and then the stop loss is going to be 58, 26, 53, 54. This is how the things is going to be. When you're using 0.1, it's going to be a risk of $622, and which is too much. But if you use maybe something like 0.005, as you can see, $622 is more than $300 if you are using your account of $300. So means for your $300, you can't trade with 0.01 because it's too much. At least when I have $100, I can use only 0.005, and then my stop loss is $31. I can take 2 trades. Means I'm going to do what? I'm going to be risking $62. You understand? So you just check in 0.001 means I can go with $10, means I'm risking $6.22. Means even if I'm going to hit the stop loss, I'm going to left with something. I'm not just going to do what? I'm not just going to lose the whole account. So you check on the calculator in order to do what? In order to make a trade. Okay, sharp. We'll go for the what we call for the TP. For the TP, because of I'm going to trade for a long, I'm going to, at least I can go to 4 hours. My TP will going to be situated where the market started to go up, and where the market started to go up is here. You see, on this last point is where the market started to go up before. You understand? So this is going to be my TP, and then I'm going to take this TP to the calculator and see how much I'm going to make if I hit this level. When I go to the calculator to the TP, I say 54, 79, 78, 97. Then it tells me what I can risk $6 in order to make how much? $29. For 0.005, I'm risking $31 in order to make $145. And then with 0.01, let me say 0.01 because of I never used 0.01. I never used 0.1. 0.1 is too big for the volatility 75. I use 0.01, 0.02 till to 0.05. Understand? So I'm risking $62 in order to make $290. So this one I recommend it when you are risking what? $100 means you are going to lose $60 in order to make 220, $290, you understand? So that's how you management. And these things, these prices is because of the time frame that we are on. Is for risk management. If we go to 1 minute and look for the structure, the same structure like this, and then we do what? We calculate, you'll find that we are losing something like $2, $1. We are making something like $100. You know, when it comes to TP, I don't like to choose someone for his TP. I do just choose someone for the stop loss, you understand? For the TP, even other people, when we are holding like this, when the market is around here, someone can close. Before we can even hit the TP, someone can close here, someone can close here because of you see the retest, or someone can close here, you understand? So I don't like to choose people's TP, but for stop loss, I know, okay, guys, all of us less $6. People who are using $10 and they are using 0.00 less risk.
Right.
Sorry, others who are using $100, let's risk $80. Understand something like this.
But for the TP, as you explained as well, hence the reason why I didn't say anything to you about that part, because I have an understanding as to what happens there, because either the market is going to look to transit, as in to turn around in that case, or it's gonna basically gonna be there for a little bit. It's gonna consolidate, fluctuating in that area. So because that would have been the last support area. So I've seen where that happened based on observation.
Yes, even for the TP, you can say what? Agree, you see my TP is here. You see my TP is here. Even yours can be here. Even other person TP can be here. Why I put the TP on this level is because of when the market is going down, it was going down before. On this level, the market started to go up. So mostly the market, even currently, it can come and do the same thing in here. Understand? It can come and do the same long buy here. Understand? When it comes to that point. Even on here, let me put a line. On here, you can see the market hit at this level and start to do what? It started to go with an uptrend. Even here, when the market comes to this point, it can choose to do what? To go up like
go back. Okay, so it'll be safe to take the closest TP area, as to not have the market reverse on you.
Because of like, let me show you another thing. When here, it might be what? Your support again. Because of this support doesn't just end right here, or is not one support. Even this one can change to be a support. It can be a support.
Right.
Even this one can be a support. Because of if you can check here, the market was going up like this. When it comes down, this is the second charge. When it makes the second charge, we say what is a support. And when it comes to on top here, it will do a what? A resistance. Because of on here, we're going to put a resistance. That's why I'm taking my TP right here, or my stop loss right on these points, because of it's where the market will choose where I'm going. I'm going to go up from this position, or I'm going to go down. That's how it works.
Okay.
So as you can see, while I'm drawing on the 4 hours, already I'm drawing the support and the resistance for a bigger time frame, you understand? As you have the support and the resistance on the 4 hours time frame. Remember, this smaller support and resistance was drawn on the smaller time frame, like 30 minutes. I drew
30 minutes.
And you can see here they covered where I said I'm going to focus on, where the market seems like the candles are going to take the same size. You understand? So this picture, it shows you whatever is happening on the smaller time frame, 24 hours time frame, is still happening in the 30 minutes time frame. It doesn't happen on the same level, but it's still happening. Understand? The support and the resistance is there on the 4 hours time frame. When we go to the 30 minutes time frame, we find it. Even when we go to the 1 minute time frame, we're going to find it and we can analyze it. So that's where we take our trades on the smaller time frames and do our risk management so that we can catch the market that is going to go for a long period of time.
All right, because I tried, and all right, remember what I said to you that basically I was not utilizing any stop loss because I didn't understand the whole system of the structure, nor did I understand anything as it relates to calculation of the pips to know the amount that you'd be risking and so on. So my whole confusion was there. But I saw where even the 1 minute, because I entered on the 1 minute once. I waited until it got to the highest level for the 1 minute, and that was when a new candle was being formed, as in on the 24 hour, and then I entered, and it went crazy, like went crazy. When it was falling down, it went crazy, 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 and that was what I was talking to you about in terms of me making using $500 at the time to make 4,000, and it went wild. But I did not have any knowledge at all about the structure of the market, how the market actually works. And basically you just taught me about head and shoulder, and even when you zoomed in, you just showed me how to figure out the structure of the market, because the whole time I would go on the 24 hour, and as I open the market, it would look large to me. So what I do, I'd zoom it in and put my focus mainly on the last aspect of the market, or currently where the market is actually working, and not pay attention to the larger picture as it relates to that double top that you showed me, because I did not see that any at all. I've been looking at this shit. Sorry, I've been looking at this thing for months and did not see that double top on the 24. I did not see that. So I know that I know you give me so much clarity. This is not even within an hour, not even within an hour, bro. Not even within an hour. You gave me so much clarity. Like even with the head and shoulder, I normally say, oh, it's a pattern. So I keep looking for it every time. I keep looking for it as a reversal pattern. That's what they would say. Oh, it's a reversal pattern. So I kept looking for it as it relates to that, not thinking that it would actually be a breakout, you know, or better yet, a false breakout. So now that you've shown me that, you know, a head and shoulder is possibly a false breakout, what that would do for me now is to open my eyes them way better to see what it is for it. For it's just crazy. It's just crazy. This is crazy.
Yeah,
And
so
we haven't even
means
been here an hour.
now you're gonna be testing them. How do they work? And then you'll be telling me that where you are getting confused again, and then we continue again. I show you what is going on in there. I will explain.
Okay.
No problem.
But I think the only thing is that I'm gonna have to get used to the calculator. That's what I'm gonna have to get used to, man. But in terms of clarity that you brought in terms of structure, in terms of market structure, um, you just gave me a whole lot of clarity. Like my brain was clinched, like clinched, trying to figure it out. And now, you know, I feel a lot freer in my head. It feels as if you just widen my entire mind span on this thing now. You get what I'm saying? I know that you showed me that you showed me, oh, look for the formation of the market. The market will always go up and down. If it should push out in any other structure, as in the false breakout and so on, it will try to correct itself, or it will correct itself. And trust me, I'm talking so much now because I have a lot more understanding of this thing now within this short period of time.
Because of our Zoom meeting has a limit. Now it says 1 minute. I think it is left with some seconds to close. It means
Oh,
we're
sorry,
gonna
bro.
talk in box.
Okay.
Sure.
All right. Thanks, man.